Hey guys, Jeff from the Brantford Realty Group here. Thanks for tuning in. I just wanted to keep you guys up to date on the recent mortgage news here in Canada. Now, the Bank of Canada just came out with a new announcement probably about an hour ago, and they had mentioned that they are raising the overnight rate from 0.25 to 0.5, so up 0.25%. I'm here with my main mortgage guy, Joe, with Mission35 Mortgages. Hey, Joe, how you doing?
I'm doing real good, Jeff. Thanks for having me on, buddy.
Thanks, man. So the Bank of Canada is raising the overnight interest rate by 0.25%. What are your thoughts on
it? Well, we all knew it was going to happen. There was some debate on how much it was going to go up, but we all knew that it was definitely going to go up, right? So it only went up 0.25 point, and that's standard, right? Usually, whenever the interest rate moves, it moves 0.25 point at a time. I know they were contemplating 0.5 point, but that didn't happen, so that's a good thing.
Yeah.
This doesn't really have a huge effect on people. Like if you're in a fixed rate, it makes no difference whatsoever. Yeah. If you're in a variable rate, yeah, your payment's going to go up a little bit.
Yeah. You know, probably like $100 or how much do you roughly?
That's a great question. Let's run some numbers.
I'm sure that's what
let's assume a $500,000 mortgage. Let's assume 30-year amortization, because that's what everybody has to take these days because prices are so high. So let's say you're at 1.5. So that's 1724. Let's say it goes up to 1.75. 1785. So not even $100.
Yeah. So because I assume that's what most people's question. Most people worry if they're in a variable, how much will it go up? Now I know that the Bank of Canada has told us the rates are going to go up again, or possibly 4 times this year. Do you have any insight on what you think might happen if they're going to just keep going up another 0.25%, or?
Yeah, it'll definitely keep going up. I mean, it can't stay this low. So a couple things. You have to remember that everybody who's gotten a mortgage over the past 5 years has been stress tested.
Yeah.
At 5.25.
Yeah.
So technically speaking, rates can go all the way up to 5.25 and people can still afford their mortgages.
Yeah.
Right? So from a grand scale, it shouldn't have much of an effect on the housing industry, I guess you could say, on affordability.
Yeah. But do you think for buyers, is it going to really affect much on their end, or?
For buyers, no. I mean, I think the issue that we have is supply, not, like the value is definitely there. The only way to control these prices, I think, is just to build more houses, really.
Yeah. That won't even supply for 2 years, right? So
what was that? Sorry?
I said building more houses won't fix today's issue. It'll fix that. It'll try to fix it in a couple of years, right?
Definitely not. Oh, you're frozen.
So
am I frozen too?
No.
Check 1, 2.
No, on my side.
Can you see me?
Now you're frozen. Yeah.
Should I keep talking?
Yeah.
Oh, sorry.
There you go.
Can you? Yep. There we go. Okay, good.
Yeah, it's all back now. So it's okay.
So like before the pandemic, like when the pandemic happened, all this weird stuff happened, right?
Yeah.
Like when the pandemic happened, the prime lending rate dropped 0.5 point. Like randomly, it wasn't even on its scheduled date. The Bank of Canada just came out and said, hey, we're dropping interest rates. It dropped 0.5 point. It stayed exactly the same until today.
Yeah, just recently.
Right?
Yeah.
Exactly. The 5-year fixed rates also kept coming down. Before the pandemic, the variable rate and the fixed rate are always like very close.
Neck and neck, yeah.
Yeah. So the variable rate would be slightly lower than the 5-year fixed rate. And you just basically roll the dice. You're either betting on interest rates going up or going down. But right now, what we have is a massive gap, because the 5-year fixed rate's been going up for the past few months, but the variable rate stayed the same. And now that it's gone up, it's only gone up 0.25 point. So like you'll have a 5-year fixed of like 3.2.
Yeah.
And a variable rate of like 1.5.
Oh, geez.
That's still a huge gap, right?
Big gap, yeah.
So you have this right now. Eventually this has to happen, I think.
Oh, yeah.
Right. So that they're close again. So really all you have to decide if you're in a variable rate right now is you have to decide, do I want to lock in and take whatever the rate is, whatever you can get, 3%,
Yeah.
or do I just want to hang tight for a little bit longer
And see where we end up at the end of the year, and then sort of
Yeah.
make a decision from there. But if they
Yeah.
keep going up a quarter point, it's almost like it's not that much of a difference. By the end of the year, you might be up over $100 more or whatever, but it's not going to be too much of a strain on the household, right?
Exactly. And don't forget too that if you're in a variable rate, you can easily break the term with very, very small penalties, right? The penalty for breaking a variable rate mortgage is 3 months interest, which is nothing.
Oh yeah.
Especially when interest rates are this low. So, take into consideration, hey, are you planning on selling and moving in the next year or two? Because if you are, you might want to stay in that variable rate.
Yeah.
If you're planning on staying put for, a long period of time,
5 years, lock it in and just
maybe.
Yeah.
Personally, if it's me, I'd wait until the variable rate is closer to what the current fixed rate is. And
Yeah.
then at that point, I'd probably lock in.
Yeah. And you said the current fixed rate is,
Yeah, like a 5-year fixed rate on a 30-year amortization right now is like 3.1, 3.2.
yeah, still historically low, right? So
Yeah, like let's look at the difference in that. So if you're at 1.75, that's 1785 a month. If you're at 3.1, 2130.
so up,
What is that? Like $400?
yeah, $300-400, yeah.
So like if you go and you say, oh my God, I want to lock in my mortgage right now, your payment's going to go up $400 a month.
Yeah.
Do you want to do that? If you don't have to,
No. All right. Well,
Yeah.
thanks for your insight, Joe. Thanks for taking this quick minute to go over what the Bank of Canada's announcement. Guys, Joe is amazing with mortgages. He's helped me out and a number of my clients. So his contact information will be below in the description. And please contact him, reach out to him. He'll take great care of you. Like I said, as I know he did. So again, thanks, Joe, for joining us. And, have yourself a great day, man.
Thank you very much, Jeff. You're the best, buddy.
Yeah, have a
The
good
best
one.
at what you do. Thank you.
Thanks.